This conference will now be recorded.
Good evening, ladies and gentlemen. It's Clueless Trading Frank. It's approximately 8:41 p.m. on Sunday evening, mid-December, December 15th, 2019. Few more trading days left for the rest of the year, the end of 2019. What a year it's been, right? Um, Full disclosure, this is purely for financial education, not for any solicitation or advice. The session will be recorded, uploaded to the Google YouTube channel for viewing by all other of our great members and free trial subscribers, and anyone out there with the internet connection who would like to find out a little bit more of the reality, the real news about the market, not the fake news that's disseminated by the media, the analysts, and all that kind of stuff. So do spread the word around. On a quick note, we have a terrific Instagram account that I tend to post a bunch of the highlights of some of the options trades that we do during the day. Do follow us. If you don't have an Instagram account, just create one and just hit follow. That's it. We're not into the social media garbage. We're in the business of just a little bit of promotion and marketing so people find out what Clueless Trading is. Don't forget that Clueless Trading is probably one of the best kept secrets in the business of trading services, and we don't advertise. It's all word to mouth, and of course that's the way we like it for now. I'd like to have a lot more members, of course, but at the same time, very happy with all you guys who've been following and hopefully benefiting from a lot of the hard work and precision content that we deliver. On that note, let us begin. So, a couple of quick things here. Number one, this is probably, and I'm going to be posting a article that I saved from my weekend readings. You know me, I'm up at even on the weekends, my guys open up at like 5:30 in the morning. They're going to take the dogs out. Doesn't matter how cold it is. Is one of everything that I've talked about over many, many years, which is this is probably the biggest stealth bull market that started in 2009, which nobody ever grasped. Now, I'm not some like ultimate crystal ball gazer, but I've been bullish, and I'm still bullish on what's going on. So, despite and it explains a lot of the things that I keep on talking about on these video casts over and over again. And it doesn't matter whether it's the RET, retail emotional trader. It doesn't matter whether it's the institutional guy sitting up on the 60th floor, on Wall Street or somewhere out there on the West Coast or the Midwest or in Dubai or in Hong Kong or in China, the big power centers, and or in Tokyo, or in Beijing. They've all been wrong. They've all been wrong. And this stealth bull market continues. And this article summarized everything, my thought process and everything. And it came out, I believe, on CNBC or Wall Street Journal. And I will post that tonight after I post the recorded video of tonight's strategic webinar. And, it made me feel good because we're not here to beat our chests and say, oh boy, how much money you're making. If I truly believed in every single of these unbelievable charts and tactical alerts and everything that I produce, and I truly followed it, and I'm guilty of that too, I'd be making $20 million a year. And all of us are guilty of that. But that is the essence of going for peak performance. To look forward what's coming, not to see where we're coming from. Yes, it's good to see where we're coming from because that gives us a perspective. Technical analysis and the structural dynamics of what I produce give you a perspective of where we're coming from. But let's look forward, all of us. Let's look forward to what's going to happen in December, in January, into next year. We are in a multi-decade bull market, and yet So many of these smart minds that we all listen to and we all read have been dead wrong. So think about that for a minute before you go to bed tonight, all right? Yes, there's been intense volatility. 800, 2,000 point, 400 points, 100 points in minutes drops. But those are short-term volatility or intra-week volatility. And in some cases, yeah, intra-week, not intra-month volatility. But the fact is, I keep on showing the longer-term charts. We should go look at tonight also to remind ourselves that we are going higher. I truly believe in US exceptionalism. You guys all know that. I don't need to explain that to you. Okay? But I also believe that we have to cooperate with the world powers that are out there in order to grow and sell to the growing global economy. And that is exactly what happened that I've been talking about on the US-China phase one deal. Look, I know I sound stupid when I say you can't be a patriot just by raising a little flag, this and that. You have to believe in the bastions, the pillars of the American economy, which is American business. American politics didn't get us here. American politics is democratic politics. Democrats come, Republicans come, all this impeachment garbage comes, blah, blah, blah. You know, Obama, he was such a socialist, yet under him, and I'm not pulling political punches, the market went up 360%. Oh, the Federal Reserve sucks, you know, all that crap. Doesn't matter. That's politics. We're talking about investments. We're talking about where is the US economy and going. That's what we are concerned with because we are all Americans. Black, white, brown, it doesn't matter. You know what matters? Brains. That's my criteria. So call me let's make a new word up, a bracist, a brain racist. Yeah, I like smart people. I like to hang out with smart people. I'd like to be a little bit more smarter. And it doesn't matter what they are. Maybe they look like a Martian. Okay, I don't care. I'd like to learn from people who are smarter because I am not smart, but I learn fast. Yes, I studied hard, high school, college, MBA, all that good stuff. So that's it. All right, guys. So the fact is that whether it's the short term is always volatile. It's like, oh my God, the roof's collapsing, the floor's collapsing, everything's going to have in a handbasket. But I've learned and I'm constantly learning. And I hope all of you guys are doing the same, guys and girls, doing the same. America is a great country. All right. But we have to engage with the world. We're not isolationists. The minute you become a protectionist and an isolationist, things go wrong because we produce some of the finest goods in the world. So who the hell are we going to sell to if we close the doors? Think about that for a minute. Okay? Our GDP is 70% consumer driven, but the rest of it, and especially when it comes to the markets, 80% of our largest companies, American companies, I repeat, American companies, sell to the world because they love our goods. So if you want to close that gate, then you tell me where the markets are going to go. Think, all right? Think. I like people who think. Anyone can talk a crap load of stuff over a bunch of drinks. But how about thinking? and then responding. Okay, that's it. That's my little, before I run for election for the next president of the United States, clueless estate trading, Frank. But I know you guys are all going to vote for me. But aside from that, let's move on. So a couple of things happened over the weekend. This is a long-term chart of the U.S. economy, of the U.S. markets, starting all the way back in 2009. We almost hit, what was the level that we hit? Yep, 666, right there, right? The devil's number. We actually hit like 670, to be honest with you. Let's see here. Boom, right there, 676. Slightly above 666, devil's number. So these things have to be taken into perspective, because we all, including me, we are all have something called recency bias. Can somebody explain to me what recency bias is? In life terms. Jason, Dominic, recency bias.
I don't know.
Okay, Jason?
I'm not familiar with that one.
Okay. Mike H definitely knows the answer. I'm putting him on the pedestal. Mike, what is the definition of recency bias?
I'm sorry, I can't hear you.
Oh, what's the definition of recency bias?
Recency?
Yeah, like as in the adjective of recent.
I don't understand the question.
Okay. Jody, what's the definition of, in simple terms, in life terms, what is the definition of recency bias?
Oh, it's predicting what the future is going to be, or where the market's going to go in the.
Well, you kind of have the right direction, but you're saying it in the opposite way. So let me explain to you guys, okay? Recency bias, which is a big affliction and a disease for all us traders and investors, okay? Not us just, I'm talking about institutions from Goldman Sachs to JP Morgan to Bank of America and all the big shots and everything. Recency bias means only one thing. It means we are so concerned with what is happening right now, we lose track of what is going to happen in the future. Recency bias is a very, very afflictive, dangerous bias or mental characteristics that we all are afflicted with. Like what is happening to us right now? Oh my God, we got another property tax bill. I live in New Jersey. I mean, you can tell me, right? Like, oh my God, my world's falling apart. We predict that everything that is happening right now is what's going to happen going forward, which is 100% wrong. In other words, we are grounded in the moment, and we think what is happening right now, whether it's in trading or in investing or in life, is what's going to happen 3 weeks from now or a month from now or a year from now. Does everyone understand what I just said? So the term,
We're concerned with the most recent.
yes, and I want all of you to Google it at some point. We are always concerned with what is happening now. And there are two ways to defeat it. One is obviously the technical aspect of the market and all that stuff. And the other one is a spiritual aspect. Do you believe that you are going to live for another year? Like if we always thought that we're going to die when we wake up tomorrow morning because we got sick today, then our mental framework will tell our body, what we call psychosomatic, our mind will tell our body to remain sick. I come from a medical family. My dad was an OB-GYN, my mother was a pediatrician. They were very smart people. God bless their souls. I'm definitely not that smart. Okay? So we are all afflicted with something called recency bias. This is a major behavioral finance, trading psychology issue, which afflicts everybody, including us options traders and investors. We are always concerned with what is happening today without seeing that the swing charts are fine. We're concerned with whether the stock dropped. Let's pick an example. McDonald's drops 30 cents and the next day it goes up $2 because we are not following the charts. We are more concerned with that the P&L, which was up a couple of hundred, couple of $1,000s, all of a sudden is either flat or red without realizing that the charts are fine. And we wake up the next morning, and if we didn't do anything stupid the day before, or hopefully some of you didn't the day before, the stock gets an upgrade to $214, runs up, pulls back. We're always concerned with what is happening now. Now, yeah, somebody said, yes, I want to make money every day. So what's wrong with it? What's wrong with it is that if you suffer from recency bias, i.e. intraday movements on certain great looking charts, which have gap fills way above, which are trending higher on the internal stochastics and all those different indicators that we look at, the patterns are looking good, you're going to lose out on the big prize, which is a 400% lottery ticket. And it's happened over and over and over again, including the stock markets, overall stock markets. Now, do you guys understand what I mean by recency bias? I didn't make this term up. This is a term that is taught in full in some of the hallowed halls of Wall Street when you're a junior analyst moving up and you're like, they're trying to teach you about the whole thing. This is behavioral psychology. This is what keeps us from getting really rich. We're always concerned about what is happening now, intra-hour, intra-day, intra-week, without keeping an eye on the bigger picture. So I like to teach myself, I like to improve myself, and I like to teach all of you to see the bigger picture and then manage the shorter term picture. Am I clear on this topic?
Absolutely.
Yes.
Yeah. And this is the same thing in life. There are guys, there are people. The lady was my neighbor, big shot at, I wouldn't name any firms, in New York, a digital learning company. My son did a whole full internship with her. She was so impressed with him, she kept him on as a consultant at age 19. Like, wow, 20, like it's great. Because he was great. Company's owned by a German company. It's an American company, but it's owned by some German billionaire company. And this lady, we went to some event. I'm not going to get into it. Losing her head because somebody in New York is cutting her off. Like, what? Because she's more concerned what's happening right now. Like we say, just relax. It's not easy. When you have real money playing there, I have real money playing in there because this is my living. I want to see my P&L big, fat, green, 3, 4, 5 figures every day. Hey, it doesn't work like that, ladies and gentlemen. So that's what I mean by recency bias, okay? Getting a speeding ticket, getting a parking ticket is not the end of the world. Look at the bigger picture. It has a lot to do with your mental psychology, how you look at life too. Okay, enough of that. So getting back to it, and you guys can Google it. Recency bias, you go to Investopedia, type in recency bias, and this is a significant issue that stops all of you and sometimes me. This is the most difficult obstacle you will have to overcome as a trader, as an investor in the financial markets. And I mean that. Once nobody can like 100% overcome it. I know that. Why? Because there's real money involved in the picture. We're not paper trading here at Crudesay Trading. But if you can overcome 60% of it, I can assure you, ladies and gentlemen, that you are going to make 4 times more money on your trades than ever. That is a guarantee. Okay, but longer picture. I told you guys before and telling you again, this is a, I gotta put this as, let me put this as a green. Let's get into technicals right now. Actually, before I go there, a couple of things. Over the weekend, Robert Lighthizer, who I like a lot, he's a great guy. I like smart people. Like I said, he's one of the smart guys in the administration. Okay? Giuliani's not a smart guy. Okay? In my opinion, he has put President Trump in a lot of legal jeopardy. I think he's stupid. He was a great mayor of New York. Broke the mafia, for God's sakes. By the way, I just finished, I wasn't feeling too well over the weekend, so I was watching a bit of the shows. And, of course, watched The Irishman. Great, great, great show on Netflix. And then I watched The Godfather of Harlem, about the Italian mafia and the African-American godfather of Harlem, played by Forrest Whitaker, who's a great actor. You guys got to watch it. Okay? You guys got to watch it. And Giuliani broke the back of the Italian mafia using the RICO Act, RICO, Racketeering and, Corruption Act, whatever, RICO, And so anyway, forget about it. I'm not here to, piss on Giuliani, but I think he's an idiot right now. Lighthizer, great. Mnuchin, great. Wilbur Ross, depending, how he's feeling that morning, he's okay. President Trump just landed a monumental freaking deal, the PHASE1 deal. Yet there is no euphoria anywhere. I love it. I love it. There's no excitement. Because every idiot from Wall Street to every never Trumper, and I can criticize Donald anytime I want when he's stupid. And I've done that. That's my right. As an American, as a New Yorker. More so as a New Yorker. Okay? I mean, amazing what he did. And yet, there's no euphoria. None of you guys are excited. I don't see any excitement anywhere. Okay? So the markets are going higher. When I see you guys really excited, don't take me the wrong way, that's when I know the markets are reaching a pretty short-term major peak, and I'll short the crap out of the market. I'll let you guys know too to short the crap out of the market. But none of that is happening. Everyone's quiet. The media is like, oh, that's a garbage deal. Yeah, right, it's a garbage deal. You just signed one of the most monumental deals in American history. And congratulations, Donald, okay, for pulling that off. And the media and everybody and the pundits, and including all or most of you, are just like, yawn. Give me a break. Wake up, guys. Wake up. All right? So, I'm not here to please anybody. I'm here to just deliver what I think, whether you like it or not. You take it. If you like it, or if you work with it, you're going to make more money. And if you keep on being that skeptical and pessimistic and stick to that recency bias to the point that, oh my God, every 50-point drop, oh, the market's kind of pull back a little bit on Friday, blah, 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 you're never going to make real money. So saying all that, so that was great. Lighthizer, our chief trade negotiator, ask an average American on the street, hey, who's Robert Lighthizer? They have no freaking clue. That's why I say make America smart again. Make America smart again. Nobody knows, like the people who are the real players, because nobody cares. All they want to look at is tweets. That includes most traders. Robert Lighthizer, Steve Mnuchin. These are the people making it happen. So, huge positive. Slight negative. Apparently, the Mexican foreign minister or the trade minister, whatever, wasn't totally keen on one of the provisions on the USMCA deal that the Democrats finally agreed with and approved, which happened on Thursday. You all know that, right? The new version of NAFTA, the North American free trade deal, and this is something that affects us directly. One of the provisions they didn't like was the hardcore inspections that were put in there. What do they call it? I forget the term. It's going to come to me in a second. Enforcement, so that U.S. inspectors can go in there and make sure that Mexican workers are getting paid right, that they're not being abused. But that's very, very difficult to do when it's a third world country. Mexico is a first world economy with a third world system, right? So they didn't like that part because they felt it was intrusion in their in their own domestic policy. Well, I still think the USMCA will get passed because Nancy Pelosi, Ms. Toughnut, and the Democrats actually got some of their wordings through. So that's the only slight negative that I see. By the way, futures are up 8 right now. Okay, futures are up 8 right now. We're going to get into patterns in a minute. I don't need to go into patterns. Just go on my Twitter feed. Look at this. We're going higher. So, this is where we are right now, and this is a +8. I love the number 8, the infinite loop, right? So futures are up exactly 8 as we speak. So that's what happened over the weekend. Brexit is going on. Boris Johnson won his Conservative Party, which I think is great, because the other guy, Corbyn, I don't want to get into UK politics, which most of you might don't care about. Most Americans don't even freaking care about London. Except it's a serious economic power, England, is the fact that he won, which is great for business, because Corbyn was a complete hardcore socialist. He made what's her name, Elizabeth Warren, look like a frigging capitalist. Well, Elizabeth Warren's very smart. I've said that, but her lot of talk was extremely like hardcore anti-business. So the fact that Boris Johnson, who's got the same wild orange yellow hair, he's a very smart guy, and the markets liked it. That's also what happened on Friday. Okay, so those are the only two things that are affecting the markets right now. The USMCA deal has to pass, despite some quirks here and there. Phase 1 deal is done, US-China, and Phase 2 will come. China is open for business. They've always been open for business. So the fact is that, there we go. So the fact is, relax. You got to be selective in the trades. You got to take profits along the way. You got to buy stocks which still haven't moved up. Don't expect everything to go up in one day, and expect to have a couple of quick sell-offs here and there. Blah blah blah. So here's your big picture. This is your daily chart. Where are we going? We're going somewhere around 3190 to 3200. This is your channel, all drawn well ahead, like from weeks ago, months ago. 3200. We're going 3200 on the E-minis, so that's about 3200 and change on the S&P 500. If you're trading the SPYs, very happy. You're very happy. This is your weekly chart where we're looking at 32.18. There's no magic here. This is your 15-minute chart, which is what we have to deal with every day. Nice. Nice. So if this is the case, and this is where we are right now, what is this? That's a frigging bull flag. I don't need to remind anyone of that. And what's the likelihood this bull flag's going to break out? What's the likelihood of that? I think it's a pretty damn good likelihood it's going to break out. Now, what is, and this is something some of you guys will know. I know Jay Fox, or all of you will know. What is this week from an options perspective as a trader? What is this week?
Options
Switching.
expiration monthly.
Thank you. That's the word I wanted to hear. Thank you. It's monthly options expiration. Since we started the service, since I started to share a little bit of my stupidity and my knowledge with all my members, what is the general bias on monthly options expiration on a
Bullish.
probability basis?
Bullish.
Yeah, overall. And yes, you get a dip on a Friday morning or afternoon, but I'm saying overall, you get that push up. It's a bullish options expiration. It's monthly options expiration. And why not? It's before Christmas. We just signed the PHASE1 deal. Thank you, President Trump. Because he was flip-flopping a lot. And I even put hashtag flip-flop. Exactly. And the fact that the majority of traders are sitting on their butts, what we call SOA, sitting on their, on their apples. How about that? Sitting on their apples. It's great news. We love fear. Let's have the market open down 10 S&P points tomorrow morning. Okay? I'm not kidding. I'm not a kid. If I was a kid running this service, yeah, you could laugh. Oh, he's a kid who doesn't understand the market. Boy, do I understand the markets. And I do understand life, that's for sure. So, enough of that crap, okay? Here's the bottom line. This is where we are. We pull back a little bit once we hit that, and then we get here, 3,200. Now, here is the interesting part. This is a Fibonacci retracement. This is where the markets were on December 13th. This is where the markets are on December 15th. This is the big, what was this big move? Why did the big move happen in this market on December 12th, which was last week? Why did this happen?
Trade deal approved.
Nope. President Trump saying he's very, very close. It's almost done. Yes, it's similar. Yeah, I agree. Okay, so exactly. Then we pull back. Like, oh my God, the world's falling apart. Every bear on all the stock twits and all the trading forums. And I hope that you guys follow some other services, because that's how it has to be comparable, right? So you guys better at least have another service that you follow, free or not, I don't care. Like, do it so you can see the difference, what we do. I don't want people to just follow me. I want people to look around. If I'm buying a new house, I want 5 contractors to give me 5 estimates. Right? Exactly. But Jason Fox knows that from a national level. So go on bids. So bottom line is, at this point, this is your resistance somewhere around 3185, 3190. Max scenario on a Fibonacci situation, Fibonacci retracement on a short-term technical basis is what we call extreme Fibonacci retracement, what we call an extension. So let's look at that for the first time. Let's do that. I don't make this up, okay? This is all Fibonacci numbers, And what is that number, ladies and gentlemen? 1, 2, 3. What is that number? Right there. The number is 3215. Guys, you don't need to trade individual stocks. Just freaking trade the SPYs. Individual stocks, of course, percentage-wise give you a bigger rate of return, but that's the number. So here we are on the extreme level, which can happen. I believe we're in that. I mentioned to you guys 2 months ago that bonuses are very important. In capitalism, you don't work for free. Even though I keep my rates pretty nominal and my advanced coaching sessions like dirt cheap to get people motivated and stuff, I'm almost like a freaking socialist. I'm giving stuff away as welfare. But Wall Street and American business and President Trump don't work on welfare. They work on pay me so I can show you the goods. So if that's the case, the end of the year run where the bonuses are paid, what do you think is going to happen? Like anything can happen, I know that. But in general, given the movement in the market, given all the positive stuff that has happened, and now that one of the biggest hurdles ever, the U.S.-China trade deal phase 1 has been done and validated, despite all the naysayers. What do you think is going to happen? The market is going to have a bias towards the upside. Santa Claus started a while ago, if you ask me. Santa Claus is going to accelerate hard. And the best part is there's so much cash, $6 trillion, $4 trillion sitting on the sidelines, still expecting Armageddon. That includes many of you. So there you go. That's why this extension up to what we call the 161.8 or 1.61. This is FIB 50. This is what the markets. I told you, like, guys, you don't have to, oh my God, Frank is like so right all the time. I mean, come on, cut that crap out, okay? Let's talk as people. Egos aside. The FIB 50 is a major, major, major support. I have showed you guys that at least a zillion times on individual stocks as well as the markets. And that's exactly where the market slipped. Double barrel bullish reversal and boom and boom. Now, it's not going to be like this in one day, which all of us would love to see happen. Of course we do. Just like you all, I want to see just my account just like, but my targets get there right away. I tried really hard, but I don't control the markets. So along the way, this is what happens. Goes up, comes down a little bit, like, boom. Goes up, pulls back a little bit in between the channels. That's where trade management comes in. And then I get little DM direct message tweets because I try to respond, or you can put it on the chat room. But the best part of the chat room is kind of quiet. I like that because that allows me more time to deliver premium content to you guys. I remember the chat room used to be packed with people a year, 2 years ago. Where did they all go? They didn't die. They're still members. They're all scared, shit scared of the market. Great. I like that. So some of you guys DM me on Twitter and stuff, and you ask me, what do you think I should do right now? My answer to that question is, I don't know. I don't know what profits you have. I said, look at the charts. And if the charts are still kind of pointing higher in between intraday volatility, do what you need to do. It's your decision. I provide the tools. You build the house. That's how you learn. Exactly. So this is what's going to happen. And then we're going to get to 32.14. And I think that's pretty substantial. And looking at the longer term charts, and this will carry most stocks higher. This is your daily. This is your weekly, so I should just have it like that. This is your weekly, and the weekly charts are pointing to 32.16. It's not a long way off. What's 31.82 where we are right now? We are at 31.83. Futures are up 8. So 31.83 minus 32.16 is 33 points times 8. So another 264 points on the Dow. And that's going to carry a lot of Dow Jones Industrial stocks higher. So that's your big picture. Let's take a look at the IWM. If you understand your mind and you know how to control it, you're going to be a better trader. Trust me. That's all I know. Scared money never wins. Okay? IWM. This has the biggest potential. I've been telling you guys that for the last couple of weeks. Yes, I was late on getting on the trade, but I delivered 1,500% on the first move on IWM. So I don't care if I was late. You shouldn't care if you're late. Okay? This is a good looking chart. It's a little bit more technical. I still think IWM gets to 166, 167. Barring any major bad economic reports showing the US economy is slowing down. But even that will be bought because now we don't have the full-scale, ugly trade war with China. It's still a trade war. That's fine. Competitors are always at economic war with each other. There's nothing wrong with that. But at least it's not going to be like, F you, you guys suck, we're going to slam this and down on you. No, that's out of the picture right now. Okay? So this has serious potential, in my opinion. IWM. Let's take a look at the IWM on the longer term charts. And before I go there, I want to show you where the markets can go. So the markets can go to 32.52 on the E-minis, right there, which is predicated on the uptrend channel, or what we call the acceleration channel on the major breakout. Remember, we had a massive range breakout. You ever hear any of the guys on TV talking about that? No, not really. They're always talking about how much the markets can fall. We had a frigging range breakout that range started back in February of this year, right there. There's your range. And it was a lot of volatility in between the range. All the walls falling apart kind of volatility. Okay? And we broke out. We broke out well ahead of the trade deal. Can somebody tell me what date we actually broke out by looking? This is the day that we broke out. What's the date? Come on, please. Somebody look at it. Look on the left-hand corner if they want to make life easier for them. Somebody answer, please. Guys, I don't have all night. Seriously.
My screen is frozen.
Is anyone else's screen is frozen?
Even my screen is frozen.
Really, that's terrible. Why?
I don't know. I'm stuck on the.
Oh, it takes about 3 seconds when I change screens.
No, I'm still stuck.
Okay, let me try to go back on that again. Okay, I just, it's my monitor 1. There are 4 monitors on this PC. You guys should be open.
Yeah, I'm on the daily.
I can, yeah, you're on the daily, exactly. So you're on the right.
Now I see you moving again.
Yeah, it normally takes a few, it refreshes, it takes a second, that has nothing to do with me. Let's go to meeting, it's Citrix, that's how they do it. All right, so here's your range that started in February, okay? Here's your range. So what was the date that the markets actually broke out of the range? And the range was 30.30 to 27.28. Everyone clear on that? This was your range.
Yeah.
Back in February. What
It was like
the date?
October 15th?
Yeah,
No, November 1st?
November 1st, yes. No, actually, to be correct, it was October 30th. It's like right after Halloween, right? So the markets actually broke out, which you never hear from anybody else. The markets actually frigging broke out of this massive range. A 9-month range. A 9-month range, okay? 9-month range. Simple technical analysis. Broke out of a 9-month range on October 30th or somewhere around there, November 1st, as Dominic correctly pointed out. And now we're doing this, and everybody's still shit scared. That's great. But see how stupid investors are and the so-called bigwigs? I mean, even a child, you can say, hey, it's been trading in this range and then it broke out here. What do you think is going to happen? A kid could answer that question better than all of us because it's going higher. If my son was like younger, I'd sit him on his lap. I used to sit him on the lap and I'd play around, you know, and teach him how to use computers when he was like 4 years old. Sitting there looking on the waterfront and just like, hey, you know, and I used to call him the Google boy because he used to type in all this stuff. Even a child can answer this. And now we broke out. Then we moved on to the upper range, which is 30.71, 31.58. We moved in that range till now. Then we have broke out of that range. Let me try to zoom in. There. We broke out of that range on 12/12, which was Thursday. Right there. And this is where we are right now. What's the upper end of the range? Just pure technicals, 32.52. I give up. I mean, the markets are telling us this. The media, which includes everyone from Fox to CNBC to Bloomberg. Well, Bloomberg's not that bad. Like everybody's so freaking scared. And yet the charts are saying we're going to 32.52. Yes, we can slip down a little bit. So what? This is your daily chart. Now, I'm going to ask a question, and please try to answer it. The lines that matter to us are the 34-day moving average and the 50-day moving average. As far as my eyes can see, they're not that off extended from the 34 and the 50-day moving average. And by the way, you don't always have to like, oh, he's showing this, I can't see it. You guys have a computer, right? So why don't you look at these charts at your own time? I know many of you use Thinkorswim or other services which show the same thing. Seriously, I don't think that's that overextended. Yes, it can pull back a little bit. It can move back to the yellow line, which is the 5-day moving average. 31.62, and everyone's going to be freaking out because the market's down 100 points. So what? Is it on an uptrend? That's all I care about. That's why you don't just buy the effing dip. You buy the tactical dip. All right, stocks. All right, you guys throw in a couple of names because I really don't have all night. I'm not feeling too well. So, and if I don't feel too well and I stay off the things, you guys are all going to lose money tomorrow. All right. So I'm telling you that right now. Apple. Hello. See you later. Apple is breaking out like nobody's business. What's Apple's highest level? Most bullish level, 294. 300. There is nothing wrong with this chart. Is there anything wrong with this chart? Somebody tell me. Somebody counteract me and say, no, Frank, you're an idiot. You don't know what you're talking about, which I don't know what I'm talking about, of course. So what is wrong with this chart? What's wrong with this chart? Somebody, come on. You guys are
Nothing.
grown men. You guys are grown men. Come on. So if
I don't
there's
think
nothing
anything's
wrong
wrong
with the
with
chart, then why the heck are you guys not buying the crap out of Apple? I think that's the question you guys have to ask yourself. Okay? This is the leading stock in the market, the epitome of the American success story. And now, thanks to President Trump, we have the US-China trade deal. And Apple's going to be down $2. Everyone's going to be like, "Whoa." Apple's going higher. This is a serious chart going on the daily. Let's take a look at the weekly. Oh, Lord. Apple broke out of a major trading band that it's been trading in since October of not this year, last year. And it broke out in October, just like the market. And this is what it's doing. We call it a bull flag. 280, 285, 300. Can it happen? Absolutely, yes, it can happen. Now, if you want to be more specific, this line here is your upper Bollinger. That number is 286. So Apple has $11 under its belt. And if it pulls back and does not break below the uptrend channel, which is 254, which is a long way down. That's 20 points for Apple, 254. So let's say something crappy happens, like, they're always attacking Tesla, like, the batteries are blowing up, yet Tesla is making new highs almost every day. Okay. 12th inspection on Tesla autopilot not functioning. Well, dude, autopilot means you have to stay awake while you're driving. You can't be drinking and having some wild time with whoever in the car with autopilot on. You got to be heavier on the road. So it's just like, remember like 2 years ago they said Apple phones were blowing up. They were burning. Last I checked, I've had multiple Apple phones. I have two now. None of them really burnt on my hand. I didn't make any toast on my Apple iPhones. So you hear all this garbage, right? So bottom line is, besides any wild situations on Apple iPhones, the stock is good for 286. Let's take a look at McDonald's. Stock I like. There was a good positive article on McDonald's over the weekend that they're going to introduce much more things than the Beyond Burger. So this is a serious megaphone. Megaphones take time to work. I think, based on my charts, based on my, I shouldn't say research because I don't do research, okay. Based on what I see, this band here, 190, 140, 41, 198, what's the depth of this band? Can somebody answer? What's the depth? What's 198 minus 191?
7.
Thank you very much. So add 7 to 198. Where do we come to? What's 198 plus 7?
205.
Thank you. And that's exactly the lower gap. 70 to 80% probability it frigging gets there. Just got to keep on keeping your time frame on your side. In other words, push out the options. My opinion, this is pattern symmetry at its finest. This is one of the, again, if I'm wrong because I've been more right than wrong, so it doesn't really matter. So my point is that this pattern will be filled. Can we get to 210, which is the upper end of the gap? Remember, this is the gap. Sure, can happen. Big boys are in McDonald's. Now, in between, can it vacillate a little bit, which frustrates all of us, including me? Like, oh, why is it down like $1.50 on a day the market's up, or it gets upgraded? Like, why is it down there from a major firm? Well, that's we have to deal with. That is what we call kill RB. What is RB? Recency bias. Let's control our recency bias. Not just McDonald's, it's a lot of stocks. But recency bias is what stops us from making the big, big dollars and not the few cents. I'm not Tony Robbins. You guys are all grown adults. You guys have made money. You know what it feels like. Well, some people have made a lot of money. People who actually are truly successful, the ones who made crap loads of money, lost a bunch, and then bounced back like nobody's business. Those are the people I admire the most. I do, because that is the American superstar, like Elon Musk. Made money, lost money, and look at him now. And he's not even South African, for God's sakes. Okay? Stephen Jobs got fired from Apple. And look at the great company he created, Apple. That's the people I admire. Okay? So that's it. Enough of the philosophical bullshit. I think this big move is coming. It has to break over the 198.06, which is the 50-day moving average. You're going to see a flurry of technical buying that comes into the picture. Throw in another stock.
Wind.
Listen, Seti, I'm going to tell you only one thing. When you speak with power. Don't speak like, Don't do that. I want you to grow your confidence. So whatever you said, I heard nothing. I heard, So say what you're saying.
I said Boeing.
There you go. Now, Boeing thank you. I like that voice, Seti, okay? So Boeing had some bad news tonight. They actually officially confirmed it. They might halt the production of the 737. So this is Boeing. So the negative, the ones who are like, oh, Boeing's going to hell in a handbasket. Boeing could fall as low based on what the news is tonight, that they might halt production of the 737 MAX because of, or at least cut back on production of that because of the intense criticism from so many different facets. I'm a huge believer of Boeing. Boeing falls, I buy it. Okay? It's almost like this is my religion. Like I want to buy Boeing, made in the USA. I don't give a crap about Airbus, and all those other companies. Boeing is one of the finest companies in the world. So yes, you might see a little hit on Boeing tomorrow morning. From a technical standpoint, this is the level which is 335. Worst case scenario, 323, which is going to look very ugly. But I still think that this level here, Seti, holds, which is 334, 338. Boeing closed at 341. Whatever happens with Boeing is going to happen real quick. And then watch my charts, the short-term charts, and Boeing, this is the range that Boeing is following. 400, 320, 80 points. So Boeing will go through some major turbulence. Like, you ever been on a long distance flight, like 12 hours, and then all of a sudden it hits a wind pocket? It's like the plane's like, you're like, oh my God, you're going for the barf bag. Yeah, Boeing's going to hit some turbulence tomorrow. I don't care. I'm going to buy the lows. So I trade Boeing sometimes both on an intraday basis for 2, 3, 4 points on the reversal, as you all know. And I also trade Boeing on a swing basis, which is a couple of days. So so far, let's see how it works. All this move down in Boeing didn't do anything for the internals. The internals are still moving higher. Big money is buying Boeing, 737 or not. because Boeing's backlog is 6 years or more than that on the backlog of all their big planes. So let's see, how far Boeing falls tomorrow. Maybe it doesn't fall. And they are going to be making a big announcement of whether or not they're going to suspend production of there's a gap here. That's the gap I just told you. 1 second. Whether they're going to suspend production of the 737 MAX, I don't think so, but what the heck do I know? Upper gap here is it's below 344. So the movement on Boeing could be quick, real fast. 341, 334 is $7. How many times have we seen Boeing $7 and then by the end of the day it's up to? Many times. I'm ready for it. Next stock, please. J Fox, throw one.
INTU. It had a
Interesting. Yeah. Okay.
we had some alerts about 2 weeks ago that didn't quite pan out, but it had a big move on Friday. So I'm curious.
I see that. Thanks for bringing it to my attention. Very interesting. Very interesting. Whoa! Look at the size of that candle. All the internals are like now perking up. I like that. Look at the MACD. Histogram shrinking. MACD stochastic starting to turn. I like that. Very smart there. Okay. I haven't been trading this lately, so I wouldn't know. Okay, hold on 1 second.
I didn't see any news, so it looked like it was just a technical move.
Could be. I'm sure there was some news for it to drop like that, but the biggest money is made on reversals. Some of the biggest money is made in reversals. So you just pointed out a major reversal play, and thanks for that. So let's do the channel. So this is Intuit's channel. We also have something called the falling wedge. 1 second. Just constructing a chart direct in front of you to show you the roadmap. This is the falling wedge. And we love falling wedges because 90% of the times they make us money. Bingo. We just broke out of that falling wedge with a low on the stock at 247, 260. Man, you should have DM'd me on this one. Look at that move on one single day. The stock hit a low of 250 and then ended at 260. We like that. And it ended exactly, Jason, at the 50-day moving average. See that? What is the likelihood based on what you see on the charts, based on what you see on the stochastics, that it's going to bust a move over the 50-day moving average within the next 24 to 48 hours?
Absolutely.
Absolutely means at least a 70 to 80% likelihood, right? Probability.
Yeah,
exactly.
if the market's green, I would say so.
Yes, absolutely. But this might be following away from the market. I'm looking at 265. Thank you for showing this to me. I'm going to showcase this stock. We'll make a note right now into it. It's not a stock that I trade that much. I only trade it during earnings and stuff. But this is serious. INTU. Okay. There's a lot of stocks out there in the market we're showing. I like DocuSign, LogMeIn's getting bought out. Arrowhead Pharmaceuticals, ARWR, just got added to the SPX midcap. Hopefully that's going to get a big pop. Holy crap. I know that because I made money on it. Humana was up big. Okay. Humana and United Health. Got to play these guys. Okay. 270 is where the downtrend line or the upper end of the downtrend channel. This is certainly looking good. It's certainly looking good. All right. Any other stock before we wrap up? It's 9:45. SETI gave me Boeing. J Fox gave me Thing. Dominic, throw one out.
You covered a lot of mine.
Okay, McDonald's. Okay, Apple I covered. Let me look at let's look at, there's so many different stocks, but all right, let's take a look at the shop is
I,
full. This makes me
I,
sick. Yeah, go
I
ahead. Which
got
one? Go ahead.
OKTA just because it's been
Yes,
pretty
yes, yes,
volatile.
yes. Okta is a serious company, and Okta is at price action over the last couple of days has been extremely weird, to say the least. Okay, Okta is a supply chain SaaS company, supply chain management, that kind of stuff. No, software as a service, and they basically work with Apple and many other companies. I like it a lot, even though the stock's being hammered lately. From a trading standpoint, there are two ways you look at a stock. Can you trade it during the day, or can you trade it for 2 days? Or are you looking to trade it for 2 weeks? In this type of stock, I don't know what's going to happen in 2 weeks, but I do know that the stock is tradable for $3 to $4. Okay? So if you buy a little bit of the cheap calls, you can trade it during the day as a day trade. Okay? Okta. Now, looking at Okta, this is what's going on here. Every single time this has done that, this was the big one, the stock has bounced significantly. Okta, in my opinion, okay, and please read up on the stocks. I'm in the business of giving you long-winded fundamental analysis on stocks, as you know, as a technical trader. I know a lot about this stock. Serious company, serious company. They could be bought out, my opinion. They could get bought out. All right, Okta. So bottom line is, it is, if you look at it since October, it is still a sharp bull flag. We would like to see bull flags which are short. When bull flags get long, we start to get worried. That's normal. So this is a long bull flag. But I do believe that all these lines here, the 50-day, the 34-day, the lower Bollinger, everything is telling us that the stock is due for a quick short-term bounce. It's a very volatile stock, mind you. Okay, great company. 123. 123. So I'd be shooting for that kind of strike price with a little time under my pocket, like let's say not December 20th, like January, early January or something. It has weekly calls, something like that. Okay, I am looking at 119 and just simply following the lines here. This is your 150-day moving average, 120, 122. Can it get back to 133? Of course it can. How many times have we seen that? I gave you service now, NOW, you guys, like months ago. I mean, about a month ago, and look what it did. These were all the old drawings. So let's clear this out. Told you guys to buy it, not here. I told you guys to buy it here. Told you guys to buy it here. The stock went from 210 to 287. Of course, if we were following recency bias and worried about every single tick up and down during the day, you'd have missed out a 75-point run on the stock in less than a month. Actually, a little bit more than a month. So yes, if ServiceNow can do something like this, this is a serious company. And this is also one doing like an Okta kind of move right there, right? Boom, falling wedge breakout right there. So this stock is good for 289. These are serious stocks because they don't have that much competition. They are unique in their space. They're well liked by analysts on Wall Street, and that's it. So yeah, so I'm just showing you an example how things can bounce when we don't think. I mean, this was earnings, by the way. In earnings, it fell like this. We got hurt on that, but then I turned around. I told you guys to buy it, and I caught a good portion of it. I wasn't there for the last move, but I got a good portion of that, at least 20 to 25 points over 10 days. So that's trading. All right, guys, thank you for attending. God bless America. Futures are still up 8. Expect the unexpected. Let's try to reduce our emotional fear based on the recency bias, like, what's happening tomorrow. Just because you get a flu one day doesn't mean you're dying. All right. So it's the same thing with trading. Just because you get a little flu because one trade's not working out during the day doesn't mean you're dead. And markets overall, just to show you a picture on the actual chart here, is we can, like I said, the SPX is not even as oh, sorry, that's now. Hold on, sorry about that. Let's look at the S&P 500. It's like it's serious. You got the ascending triangle breakout moving up. We can go a lot higher. A lot higher doesn't mean anything crazy. I'm saying 300 points, but that means a lot to think. Be selective on the stocks. Definitely buy some of these biotechs that I tell you. A couple of them have got bought out big time. Some of you have made money on it. Some of you have just sat around saying, oh, maybe the next time. Well, the next time is buy some of the ones that I tell you to buy. Just buy 1 or 2 contracts. Doesn't matter. If $500 goes to 4,000, my God, you're gonna feel like you just won the lottery, and your confidence level is gonna go up big time. And God help me if you had $5,000 and it goes to 20,000 on a buyout, because that's really what happens. Then you're like, king of the hill. Trading has only one aspect, and this is the last thing I'm going to leave you guys with. It's called risk. But not the kind of risk that you want to take, like driving drunk. It's called quantifiable risk, okay? Q risk. We quantify the levels based on charts, and we take the risk. That's all. See you guys this week. Tomorrow. Let's have a great week. Holidays are coming up, and thank you for attending. You guys are the best. Thank you. Good night.
Hey, thanks, Frank.
Anytime, Jason.